Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Zwelakhe Mnguni from Benguela Global Fund Managers, Ricus Reeders, PSG Hole-in-One Ruimsig. Be sure to send your questions through email stockwatch@bdtv.co.za or SMS 41392 or on Twitter @BusinessDayTV, #Stockwatch. Gents, appreciate the time. So let's start with you. Let's start with Sibanye Stillwater. They really are hitting the sweet spot in terms of they've got gold, they've got PGMs, but they're also kind of operationally looking quite good as well. Nice update. Market liked it. Your thoughts on the update and the stock at this point? I mean, it's been one of those precious miners that's had a great year.
No, certainly. I think we were actually talking about it this morning that they had quite a bad period when they went into these green projects, and that squeezed their cash flows quite badly. And gold has come out to bail them out, and their execution is now looking very good. And they have now the cash to continue, and I think. As you say, the market liked this. I think the stock is up over 8% as a result of the update that they brought out today. I mean, across the board, I mean, the numbers are looking quite decent on production, but also on profitability. The price of gold has played a significant role. The slight improvement in the PGM prices has also played a role.
Absolutely, yeah. Up 8.5%. It's kind of it's doubled since earlier in the year. Ricus, your take it? I mean, the chart was going nowhere for much of the year, and then of course April happened, and well, here we are at the races.
Yeah, and then you get an update like today, which as you said, the operationally very well executed, costs maintained both here and also in the US. And to add flavour to that, there's a tax credit coming in from the US government, plus probably legislation against Russia dumping palladium into the US, which is obviously very good for their Stillwater operations because of the heavy concentration in palladium. So certainly the win from behind, and with a new CEO, market liked it.
Yeah.
And does Ricus, stay with you a second, a sense that, picking the single commodity miners, I mean, there's gold stocks out there that have done better than this, but it kind of de-risks to a degree, or would you sort of say, no, pick a PGM miner, pick a gold miner?
I think with Sibanye, the interesting story is not merely the mix in metals, but also the mix in geography with their operations in America, their operations over here, what they're doing with the green energy space. So you get not only diversification in metals, but also in geography. Yeah. So I think from that angle, it's quite interesting as well.
Zwelakhe, let's go to the Vodacom Please Pay Me question came through. How much is this going to hurt Vodacom? We don't officially know the number. Bloomberg is reporting 500 million late this afternoon for the number. But that, I mean, in essence, it's a big number. For you and I, for Ricus, it's a big number. For Vodacom, they can afford it?
Yeah, they can indeed. I mean the announcement range, I think the GST requirements that if it's above 0.5% or 1%, they need to make a specific detailed announcement. So the fact that it's below that, I mean, kind of highlights the materiality threshold hasn't been broken. But I am not sure if they will be absorbing other costs related to litigation, because I think there was quite a big component of the whole battle that was fueled by the fact that litigation costs had accumulated and they needed to maybe cut a deal on that. So they might take the litigation costs, put them through the expense line, and then put the settlement as a specific item. So I would suspect that it would be slightly bigger than that. It might be accounting gimmickry that might have got it below the threshold.
Yeah, there is a lot of lawyer fees. This has been going on for forever and a day, and lawyers like to get paid. So, like, if we stay with you sort of more broadly in the telco space, we've seen the MTN results, Nigeria, Rwanda, Ghana, Uganda. We had that Vodacom update earlier this morning. Your thoughts on the telco space? Is there still, it's been a good year for them. Are you still seeing opportunity in our local telcos?
Yeah, look, I think they have an element of defensiveness in their nature, but these are not heavy growth. And I think, especially on the SA side, I mean, Vodacom is very, very heavily biased towards SA, but MTN is getting good growth from markets like Ghana and Nigeria after they got the pricing back, the pricing power back through the regulator. I think we've seen significant improvement in performance after the currency was depreciated and they couldn't keep up with the capex. So I think if I had to choose between the two on a balance of growth and opportunity on valuation, I'd probably go with MTN at this stage. I know it's run hard, but I'd still feel there is more scope for them to potentially improve, especially if we have a dollar weakness in the near term, where we could see the currencies and the commodities like oil strengthening. So the emerging currencies and commodities like oil strengthening. That would be very supportive to an MTN operating environment.
Ricus, for you, some telcos?
Yeah, I'm still interested in Telecom, and one of the reasons is there's less political risk involved. I still think there's a cloud specifically from the US regarding MTN and their dealings in Iran and Afghanistan. Vodacom's similar story, possibly. And I think Telecom is still underappreciated as an ongoing recovery story. But as Zwelakhe has said, you know, these guys are in the end still utilities to a very large extent. So they've had a stellar run. They've gone sideways for a month or so. So I don't think they're expensive or anything like that. But just because they, on the industrial side of things, have been one of probably the best performing sector apart from the old Naspers process nexus. Don't think that's going to continue.
Then we've got the announcement from Blue Label yesterday. We're getting Cell C coming to market. That's been widely known by the market. Does Cell C interest you in the telco space?
Well, even there, I mean, if you know, I was talking in essence these companies being basically utility type of companies. Even there, Cell C is looking at single-digit revenue growth going forward. So it's a great business in the sense that they're asset light and they don't have the operational risk that the guys have that's got to go and actually build the towers and things like that. But it's not. It depends on revenue growth in the end, how many subscribers you can get, and also retain.
I hear you. Absolutely. For you, Zwelakhe, Cell C, does that interest you, or are you going to stick with your choice?
No, I'll stick with my choice. I think, I mean, from a company-specific point of view, not relative, I'd say that Cell C or Blue Label has done well to de-risk the business from being a asset-intensive or capex-intensive business into a capital light. But that obviously they had to give up some margin. It makes them a bit more stable. The trade-off is that you're going to have to take from the same margin that is compressed to basically do marketing and try and attract more subscribers. So depending on how they execute on that part, I think they might do well, but I wouldn't be so excited about that one. I'd still stick with MTN.
Let's take a look at the Truworths update. UK actually now saving them, interestingly, 40%, a little over 40% online sales in the UK operation. Zwelakhe, local operations under pressure again. Your thoughts on Truworths and the update we saw earlier today?
Yeah, I mean, I thought the rest of Africa, what they call Africa, I mean, that was quite disappointing. When they seem to be saying that they cut back on the credit side to try and control that, but they still opened new accounts. I think that it might be an indication of the challenges they are facing on the fashion side. I mean, the rand has strengthened. That should have helped them from an import point of view and the margins, but they seem to have gotten the fashion wrong as part of the whole thing. So I was a little disappointed with their numbers, to be quite honest. I mean, the UK sales was up, but there's also a bit of space growth, and as you said, the online sales growth has contributed to that. But I'm still not convinced. I mean, it looks like there's no clear strategy to it at this point in time, and I don't know for how long could the market allow them to continue like that.
I take your point. Ricus, Truworths for you. Ooh, I just zoomed out to a 3-year chart. It's back where it was 3 years ago. Shouldn't have zoomed out.
4 years ago. 4 years ago, Simon.
Okay, you now
And if
zoom out,
you-
I'm
and if you-
assuming even further. Okay, gotcha.
And if you don't count in COVID, you can go back 5, 6 years, which I think is what Zwelakhe has said. It's growth has been a little bit, not a little bit, a lot disappointing as far as where is this company going is concerned, and that's what the market is asking, and it shows in the price. These results in itself, at least margins were a little bit better, but revenue is still down, and so you need both of those to be pointing in the right direction to get action in the share price. Never mind the sentiment in the market looking at this company and saying, oh, well, these guys are going places, because at the moment, I don't think they are. It's a little bit more of the same, where they are trying to control costs. They are trying to control their credit book. They are trying to get their stock levels right. But where's the excitement? I really can't see it in Truworths.
Yeah, and the Pixar. I mean, you Pep calls some folks are Mr. Price. Truworths never really pops up. Let's go to what had the certainly the social media is all excited. The Michael Berry short, Nvidia Palantir. Everyone's deciding this is the end of the world. Zwelakhe, I mean, bull markets climb a wall of worry. There's always someone who's out there who's short. Michael Berry, with respect, gets hauled out. He was, do you worry about this, or is it a case of, let's just look at the ground, let's look at the numbers, let's look at what's happening in the market, rather than, I don't know, what some American is doing in his fund?
Look, I think there's two perspectives here. I think we have to separate the valuation, the stocks in the AI space, their valuation, from the fundamental tailwind of AI. I think the tailwind of AI is permanent. It's going to stay with us. It's going to make significant or have a significant impact on the global economy and many sectors. And I think that's a long-term wave. But there are some headwinds that they have to overcome, including power supply, which is something that I don't think the market is taking into account in terms of they condensing the fundamental execution into a short space of time, hence the high multiples, and therefore taking a big risk that there'll be power. But on the valuation side, I think the valuations are elevated. I mean, Palantir is elevated, highly dependent on the US, and I wouldn't own Palantir. I'd probably hold Nvidia at an underweight, primarily because it's got a real demand. It's dominating the space. The one thing that worries me about Nvidia is that all these transactions with OpenAI that are secular seem to suggest that we might get hooked as the market through the Nvidia. If things don't go well on the OpenAI side, we might get hooked by Nvidia's significance in the market. That might pull the market down, global markets down as a result of that from a valuation point of view.
Yeah, the circular deals, I share your concern around that. Ricus, for you, I mean, there's always someone who's telling us that the world is ending, that we must exit markets. I don't know. I found that this trying to sell at the top, when I do sell, the top is typically a heck lot higher than I ever thought.
Yeah, that's a problem. By definition, any bull market is overboard because
Yeah.
prices are going up and earnings are trying to catch up. It depends on how overboard it becomes. I think what is interesting about his short selling is not specific. He's not selling AI short. He's not selling the tech sector short. He's chosen two very specific companies.
Yeah.
Zwelakhe has just spoken very well about Nvidia and the possible risk associated with that. With Palantir, just top of my head, I mean, guess what is Palantir's tax rate at the moment? It's 2%. And so the money they are getting, they are expending through share buybacks, first of all, and the rest of their cash flow is going into US treasuries. Why would they do that? I mean, don't they have anything better to do with it? What I'm really saying is that a lot of the earnings growth in Palantir at the moment is as a result of an extremely low tax rate. That changes, and it will change over time. It's going to paint a very different picture as far as Palantir's earnings are concerned, and considering they're sitting on a historic price earnings of what, 666 if I'm not mistaken, which tells you a lot about the company itself. That is, I can sort of, if, and I'm not, and I don't know whether that's Barry's that's what's going on in his head, but if somebody were to tell me, make the bear case for Palantir, that what I've just spoken about, specifically as far as its tax rate is concerned, that would be my bear case. But as you've said, trying to time the top in these things is impossible.
Yeah, I agree with you 100%. I mean, I think their price to sales is something like 80. Not price to earnings, price to sales is around 80. It makes Nvidia look like a cheap stock. I take your point. We can make a bear case. Calling it's a different story. Ricus, what about Outsurance? Question coming through in the emails. Like the look of Outsurance, Australian business, nice. Ireland coming along slowly. Outsurance be one on your list?
Yeah, I mean it's one of those is expensive on a valuation basis, will probably remain that way, because certainly their track record tells the story. It's one of the few local companies that seems to be getting it very much right in Australia. Their model's working here, their model's working there. It's I think if you're looking for that kind of financial company with a geographic diversification and your money is tied in rand, it's not a bad way to invest.
Zwelakhe, for you, Outsurance?
I like Outsurance. I think their execution has been exceptional, and I think I like what they did in Australia, trying to go back to their direct sales model. I think that is very positive. That's what they do best compared to other players. But it also gives them a pricing advantage in that they can offer lower prices. So they're sharing what they would have paid in commissions to their advisors. They now sharing that with the direct client. So that model has worked very well in South Africa, and I think continue to work very well elsewhere. So I really like the execution in that business. I mean, the multiples are a little pricey, but I think it's well deserved in terms of the growth potential.
What about FirstRand? Question came through. The sense today was maybe required to raise a further provision in the current financial year. This is their UK challenge that they've got. The question is, I hold FirstRand. I like it. It's been good. I've had it a long time. Should I be worried about this? I mean, it's lucky they've got a provision. They're going to add to it. Short answer, they can afford it. Does this UK issue concern you? Would it concern you if you were a FirstRand shareholder?
Look, I think this is a once-off item in my mind. I think they are a very well-run bank, and they would hopefully recover over time. I wouldn't be too concerned about this as a once-off item. I think what I'd like to see more of, I mean, FirstRand has been known to be the leader in banking in terms of innovation, and they brought a lot of technologies, including cash swallowing ATMs. But I am just worried that that pace of innovation has slowed down, and we need to see more of that. I think that's more of a long-term concern. But as a business, I'm not worried about the once-off provision.
Ricus, for you?
Yeah, it's if I can do an analogy with Vodacom, it's sort of
Yeah.
almost the cost of doing business. In other words, as well, like I said, it's a once-off. Therefore, with Vodacom, we now sort of know what the amount is, plus minus. With FirstRand, we don't know yet, so I'm staying away from the share until I can quantify the possible risk. But I don't think it's going to have an influence on the future operations of FirstRand. As well, like I said, that's got more to do with what kind of growth, what kind of innovation that they will do with the company itself. But just because I'm not quite sure of what the amount is that they will have to pay, I'm staying away from that at the moment. But I won't be worried about the company. It's not going to make or break them as far as I'm concerned.
Yeah, no, I get the point from both of you. Ricus, let's stay with you. Great question coming through. Premier Group is doing great. Why isn't Brait following it, considering they own 35%? I imagine this is probably some of the corporate actions around Brait. Folks, I'm sure you're thinking on why Brait is lagging, notwithstanding it holds Premier.
Yeah, I think it's an investment holding company, so we all know that there's a discount and a dislike for that kind of company on the JSE. So in as much as it holds Premier, that value is already reflected in the share price of Brait and is discounted in the share, and the discount is because it's an investment holding company and a result of all the corporate action going around it.
Yeah.
And I won't be surprised if there's a bit of a legacy distaste for Brait as well, considering its track record historically. So it's a combination of all those things.
Yeah, I remember the Brait of 20 years ago, that it's no longer quite the same business anymore. Zwelakhe, question coming through, Anglo American. Is it a good bet for copper exposure with the tech deal that will probably happen next year? Would Anglo be a pick for you for copper exposure?
Absolutely. I think I'd pick Anglos over BHP. I mean, BHP has got far more heavier iron ore exposure, and I think with copper, with the electrification wave in the auto industry, but also with all these data centers, I think copper will be a major beneficiary, and I think Anglo is well positioned with that deal once the deal is concluded.
Quickly before we go to stock picks, Ricus, would you be an Anglo copper buyer?
Yeah, I think Zwelakhe has summed it up very, very nicely, and I won't add to it or waste any time. Completely agree with that, with Zwelakhe.
So let's go to stock picks. Ricus, Motors, we saw vehicle sales out earlier this week, Monday, I suppose, Tuesday, one of the days. Another really, really strong set of motor vehicles, and you're going with Motors as your pick.
Yeah, we were talking about Outsurance now while they're executing in Australia. Another company that's doing it is Motors. Chairman's statement out today as well on the back of those vehicle sales. Australia is doing well for the same reasons South Africa is doing well, because Motors has managed to tie up with Chinese manufacturers and producers. So that's coming through in Motors' figures as well. Going forward, very positive on that side. The aftermarket car sales part is steady. Their financing is steady. UK is a bit of a laggard. But if you take a look at the share price of Motors, its current valuation, historic price earnings of about 6, historic dividend yield of about 4. I think that price trend can maintain to a price of about 125 Rand, 135 Rand from current 115. And again, it's cyclical, so don't forget to sell. But for the moment, it looks pretty positive, both from the managerial side as well as the operational side.
Yeah. And market like that, for almost 6% up on the day. They did like that chairman report. So like you going with Amazon, I got to say, the results last week, there were just so many giant numbers. Amazon certainly one of the standouts, and your pick for today.
Yeah, I think Amazon has got, we saw re-acceleration in AWS, but also the international business and the US business seem to be doing relatively well. I think one thing that I believe Amazon could benefit from is the robotics element.
Yeah.
As AI improves, I think they will be able to get a lot of cost reduction. So in the long term, I would expect that the efficiency would improve significantly in terms of the cost of running these operations. So I believe that it would be a good pick. I know it's trading at about 35 times, but I think the others are trading in much higher multiples, and I believe that it would be a good position for the long term.
Yeah, Andy Jesse's actually on record as saying he says they can double sales in 7 years. This is via their website, but with the same staff complement. To your point, robots.
Yeah.
That's all for Stockwatch today. Thanks to our guest, Zwelakhe Mnguni from Benguela Global Fund Managers, going with Amazon. Ricus Reeders, PSG hole-in-one with Motus. And don't forget to tune in next Tuesday at 5 p.m. as we'll be bringing you the JSE's Stock Pick event. We'll get inside analysis on some of the stocks that are catching the eye of the investor community. But that's right here on Business Day TV. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.